Hello, I'm Haider Malik, host of the Mehmi Financial Group podcast. Today's topic is Rebuilding Alberta, Financing Machinery for Construction in Calgary and Edmonton. With public and private investments flowing into flood recovery, transit expansions, and energy related projects, contractors need heavy machinery, from earth movers to specialized drill rigs, to compete. But buying equipment outright can tie up capital. In this episode, I'll share financing strategies tailored for Alberta's two largest markets. First, project-backed term loans. Alberta lenders often structure loans around your contract milestones. Instead of a fixed 7-year term, you negotiate repayments tied to progress draws on flood mitigation or light rail projects, present your project agreements, billing schedules, and hold back release dates to your lender. Transparent cash flow forecasts can unlock advance rates of 85 to 95% of equipment cost at competitive spreads. Second, equipment leasing. For core assets like excavators, cranes, and compaction rollers, a finance lease lets you secure machinery for 5 to 7 years with a nominal purchase option at term end. Lease payments align with project cash flows and preserve working capital for mobilization and materials. For specialty equipment, hydrovac trucks or geotechnical drill rigs, an operating lease or short-term rental avoids idle asset risk once the job wraps up. Sale-leasebacks can free up equity in your existing fleet. If you own late model loaders or aerial lifts outright, sell them to a finance company and immediately lease them back under an operating agreement. The lump sum proceeds can fund deposits on new gear required for arena retrofits or hospital expansions in Calgary and Edmonton while you continue operating your fleet uninterrupted. A revolving line of credit secured by receivables or equipment appraisals provides another layer of flexibility. Alberta contractors often face extended payment terms up to 60 days on municipal and energy sector contracts. With a credit line, you can draw up to 80% of outstanding invoices or 65% of equipment value to cover payroll, fuel, and subcontractor fees. Interest accrues only on what you use, and you can repay as invoices clear. Invoice factoring accelerates cash flow when payment delays threaten timelines. Choose a factor experienced in construction retainage structures. They'll advance 80 to 90% of invoice value within 24 hours and handle collections. Non-recourse options add 1 to 2% in fees but protect you if a client defaults or disputes payment during the rebuild. Government programs can lower your cost of capital. The Canada Small Business Financing Program supports loans up to $1 million for equipment, sharing lender risk, and often translating into rates 0.5 to 1% below market. Alberta's Municipal Climate Change Action Centre offers financing incentives for energy-efficient machinery used in flood resilience projects. Align equipment orders and financing draws with grant approvals to avoid tying up cash. Local credit unions like ATB Financial and Service Credit Union understand Alberta's market cycles. They often provide relationship-driven lending with flexible covenants and stepped-rate loans that start low during early mobilization and adjust as revenue ramps. Build these relationships by presenting clear financials, year-to-date statements, equipment inventories, and project contracts. Before deciding, run a total cost comparison. Include interest, lease fees, residual value risk, maintenance, insurance, and tax depreciation benefits. Model cash flows under scenarios such as supply chain delays, labor shortages, or commodity price swings. Stress test each financing structure to ensure covenant compliance throughout project life cycles. 3 action steps. 1. Document your project payment schedules, retainage rules, and anticipated draw dates for Calgary flood repairs and Edmonton transit expansions. 2. Package your financials, profit and loss statements, equipment lists, and contract summaries, and share them with brokers and lenders. 3. Solicit multiple offers for term loans, leases, credit lines, sale-leasebacks, and factoring agreements. Then compare on true cost of capital and alignment with project milestones. By matching your financing structures to Alberta's rebuilding projects, you'll preserve your working capital, bid more competitively, and deliver on time and on budget. With the right blend of loans, leases, credit lines, and partnerships, you can equip your fleet to support Calgary and Edmonton's recovery and growth. I'm Haider Malik. Thanks for listening.